What's up, Money Minds? Welcome back to Market Briefs Video Edition. Today is October 29th, and here is some business and financial news you can finally use. It is official. Facebook has just changed its name to Meta, which in itself is pretty meta. This is Zuckerberg's attempt to bring us closer to the Metaverse. It's also an attempt to have us forget about what's gone on with Facebook over the last couple of weeks. The Metaverse is Zuckerberg's vision of a virtual reality type world as he pushes to expand Facebook beyond just social media. In yesterday's market recap, major indexes resumed their rally despite mediocre economic growth data. Earnings season continues to boost investor confidence in big named companies and the overall market. Yesterday, some large cap companies reported earnings. Most were positive besides Amazon and Apple. Today's focus will shift to energy. Both ExxonMobil and Chevron report. In today's financial tip of the day, we've actually got a quote for you. This quote in particular comes from one of our very own Money Minds on our YouTube channel, and the comment reads, "This is an awesome conversation. Education is totally key. Everybody and their mother wants to predict the next market crash. In reality though, nobody really knows, and it is pointless to guess. Instead of guessing, Jaspreet and I made a video over on the main Minority Mindset YouTube channel that shows you the 3 top steps you need to take in order to go about a market crash. So if you want to watch that video in its entirety, I'll leave a link in the description below on exactly how you can find it. In our first main story of the day today, we've got to talk all about the economy. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below, hit that little notification bell too, that way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. The US economy grew a whole 2% in the third quarter. That is the slowest gain in the pandemic era recovery. Not surprising though, supply chain issues are partially to blame, along with low consumer spending. Gross domestic product grew 2%, missing the 2.8% expectation mark. Consumer spending only rose by around 1.6%. compared to its 12% spike during the previous quarter. Spending on goods fell by 9.2%, and spending on long-term goods like cars and appliances dropped by a whole 26.2%. On the other hand though, jobless claims reached a pandemic-era low during the week of October 23rd with only 81,000 claims. Continuing claims also dropped to 2.24 million, and citizens receiving benefits decreased by 448,000 to 2.83 million. But here's what everyone wants to know about: inflation. The Fed's inflation gauge, which excludes food and energy, showed a 4.5% rise, which was actually lower than last year's 6.1% increase. But this is still pretty high compared to pre-pandemic times. Next up, another day, another massive earnings call. Shares of Amazon plunged 4% in extended trading after the retail giant missed on its estimates. Earnings were $6.12 per share versus the $8.92 that were expected. In addition, revenue came in at around $110.8 billion versus the $111 billion that was expected. Amazon cited many challenges last quarter, from supply chain constraints to logistics and labor costs. Another reason for the downtrend in numbers is Amazon had to compete with bloated numbers from a year ago. Now let's talk Apple. The world's most valuable company, at least for now, reported earnings after the bell. Apple is currently in the midst of a massive growth on the back of its flagship product, the iPhone. Earnings came in at exactly what were expected, $1.24 per share. And revenue was a little bit lower than expected at $83.36 billion versus the $84.65 billion. Apple's fourth quarter ended last month, so this earnings report only includes a couple days of iPhone 13 sales. Tim Cook was nonetheless disappointed. He said supply chain issues cost the company around $6 billion. Wall Street is expecting that Apple sales will grow 31% compared to last quarter. Moving on though, Starbucks saw moderate growth on its fiscal fourth quarter earnings report. It beat estimates on earnings but missed on total revenue. The coffee chain said it plans to increase all U.S. hourly wages to at least $15 an hour, but its stock still slipped during yesterday's trading session. Some other notables yesterday were MasterCard. MasterCard saw a rebound in third quarter profits after travel and consumer spending boosted the economy's bottom line. Despite a relatively positive report, though, MasterCard underperformed in the market. Yum Brands, the parent company to Taco Bell and KFC, sizzled out on its earnings report. The restaurant brand beat estimates on both earnings and revenue, fueled by stronger demand for KFC. In addition, KFC same-store sales increased by around 6%. That is it for our main two stories of the day today, so let's take a quick break to talk about today's sponsor, M1 Finance. With M1 Finance, investing on your terms is as easy as, number one, just pick your pie. This will show M1 Finance exactly how you want your money to be invested. Number two, just set up automatic deposits. That way, every single time you get paid, some of that money goes towards your investments. And number three, just sit back and let the market do its thing. Of course, without worrying about commissions. And what's even better is if you can't afford to invest in your favorite companies, you can invest in fractional shares with the help of M1 Finance. This means you'll buy portions of a share in your favorite companies like Amazon and Apple, but without the big price tag. So if you want to learn exactly how M1 Finance works and want to start investing with them, I'll leave a link in the description below on exactly how you can do that. Big shout out to M1 Finance for sponsoring this video, and now back to the news. Pending home sales fell an unexpected 2.3% in September and down 8% from this time last year after analysts predicted a sharp rise in sales. The drop in sales is most likely due to mortgage rates rising again after falling every month since July. Mortgage prices rose over 3% during September and 20% year over year. Next up, oil giant Shell reported much weaker than expected earnings during the third quarter, pushing New York hedge fund Third Point to call the company out to break up. Shell's third quarter earnings came out to be around $4.1 billion, blaming Hurricane Ida for taking away around $400 million from its original revenue. In addition, the company made around $5.5 billion during the second quarter and was expected to bring home at least $6 billion in Q3. Third Point called for Shell to break up into multiple companies to perform better and increase its market value, although the hedge fund conveniently has a $750 million stake in Shell. Next up in our Pick Your Brain section, retail sales are expected to surge 10% to new records over the next 2 months. Holiday retail spending is expected to reach around $859 billion, excluding car dealers and restaurants. And in our Mind Break section, as prices for common goods rise around the world, Parisians fear the worst. Wheat prices are rising in France, and that could soon mean that baguettes may follow soon. If you aren't familiar, baguettes are a staple in French culture, and the price of baguettes has even been used to measure the state of France's economy. Over 10 billion baguettes are consumed every year in France. Bakeries that specialize in baguette making have started putting up signs warning customers that prices of baguettes could begin to rise 3 to 5 centimes, or about 4 to 6 cents. The bread industry as a whole has gone up around 30% after bad harvests and other supply issues. Bakers are now doing everything they can to preserve the price of baguettes, but times are getting pretty tough. Money Minds, we are nearing the end of today's Market Briefs newsletter, but here's just a few more things to keep in mind. At least 5% of unvaccinated employees have quit their jobs due to vaccine requirements. A quarter of US workers say their employers are mandating vaccination. Another thing to keep in mind is that McDonald's is bringing back the McRib next week, as well as its very own NFT. The fast food giant created a handful of NFTs making their debut on Monday. In addition, Amazon is releasing its first ever Amazon TVs with Alexa built right into them. You can now talk and control this TV with no remote required. And one last thing to keep in mind is that last year, cigarette sales rose in the US for the first time in over 20 years. America's largest cigarette manufacturer sold around 203 billion cigarettes last year, possibly due to more people coping with stress during the pandemic. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, Money Minds, and I'll see you all in the next one.